Hi, I'm Chuck Rose, and I'm grateful to be the financial advisor on the THG LLC 401k plan. I'm also grateful to help you get started. Because you're watching this video, probably means that you're eligible now for the 401k plan. And the following video explains all the details and how to get started. I just wanted to say very quickly that you should have received all the following things in email: the welcome letter, the plan highlights, the summary plan description, and the safe harbor notice. The welcome letter actually has the link to which you can get started in. If for some reason you did not get this to email or to the right email, please let your manager know. The email is a great way for you to get the right disclosures and for you to be able to open your account and make sure that everything is working well as far as you getting the information you need, getting your statements, and everything else. So with that being said, please enjoy the video that helps you get logged into the THG LLC 401k plan. I wish you luck in getting started. There's a couple action plans at the end, and then please feel free after you watch the video and after you log in to email me with any questions. My email will be at the end of this video, and you should have access to this through your managers and through the web portal as well. Have a great day, and thank you. Let us know how your progress goes.
All right, everyone. Welcome to the Troutman Hospitality Group 401k enrollment video. We're here today with Chuck Rose, your plans advisor, and John D. DiGiorgio of Claris Financial Group. And we're here today to introduce your 401k plan. So with that, I want to turn it over to your advisor, Chuck Rose.
All right, thank you for joining, everyone. I wanted to start by introducing myself. As the financial advisor attached to this plan, I figured I'd share a little bit about my background. I've been in the financial services industry since 2001. I started on the institutional side, and throughout my career, I've always been happy to help my colleagues and my clients along their professional routes, especially from taking their initial steps. Today, in my current role as a financial planner, I really like helping small businesses. A couple reasons. They're the biggest employers in America, and also they have a very positive impact on their communities that they operate in. And you're part of that, so thank you. Today, we're here to welcome you as a participant in your company's 401k. And I wanted to start by saying congratulations. Congratulations to you, because taking a step is not always that easy, but we find it's a really big indicator of long-term success. Every small step you take, if you could do that repeatedly over the course of your saving and investing career, can really have a compounding effect. Every step that you take to learn, to engage with your benefits, and to save can really, increase your chances of success over the long term. I also wanted to thank the team at THG LLC, Charlie. I wanted to thank Joey, and I want to thank Georgine and their teams. They worked very hard to bring this benefit to you over time, starting right now during this enrollment video. In summary, a 401k plan, and especially this one, is really structured to benefit long-term employees that have a positive impact on your clients. In your case, it's your diners. If they're happy and they come back, we're all successful. The plan can grow, your tips can grow, and your retirement savings can grow as well too. I wanted to keep one thing in mind and ask you to keep one thing in mind as we move forward with how to enroll, how to log into the website, and how to think about setting up your retirement plan. There's a lot going on in the media right now as we're recording this, late year in September of 2022. Despite what's going on in the media, please, try to think about your personal situation and weigh that heavier than you would what's going on currently in the markets, in the news, what's going on globally in the US, and also in our communities. The reason I say that is retirement looks different for everyone, but it usually starts somewhere between ages 59 and 72. That's about when you can start accessing your retirement funds. So whether you have a 5-year time frame, a 10-year, or a 20 or 30-year time frame to get to that age, if you use the software appropriately, it will give you really good guidance and advice on how to invest your retirement savings due to your personal condition, not just what's going on today. And we find that could be one of the biases that gives us success. If we can focus on our own road, we can be more successful over time. As you see emails come through from me or my team, just feel free to reply to them. They're there to educate you. They're there to be thought starters. and I look forward to checking in periodically and having a conversation. One of the most important things that I wanted to echo that Jerry's going to go over, or maybe I'll go over, depending on where it's in the information, is picking a beneficiary for your 401k. Now, that's something you really need to do right off the bat. We're going to talk about that, but there's a form available. So if there's ever a change, please make sure you know how to access that and contact us and how to file that correctly. So that's it for my comments. You want to move into the plan details, Jerry? I'll kick them off.
You got it. Thanks a lot, Chuck.
So these are the common questions about the 401k plan that you can enroll in today. And there's going to be a link that's arriving in your inbox if you're eligible to join the 401k. So I'm just going to literally just kind of glaze through these. This is going to be available to you via email, Jerry. Is that true?
Yes, you all should have received a copy of this via email, as well as a copy of the new participant welcome letter, which links right to the website.
Yeah.
So by clicking on this web address right here, it will take you through a little bit of a Q&A to get you involved, or if you want to just go to the screen and log in, you can click on that one.
So basically, you participating in watching this video is the first time you raised your hand and said, I'm interested. And that's great. But the next time you have to raise your hand is literally clicking on that link, logging in, authenticating yourself as a participant. Already got your information because this is a company benefit. This plan is by the company, so it really is attached to your payroll. So it has your information, but if you see anything there that needs adjustment, just let us know. But I don't think that's going to be the case. So let's go through some of these Q&As. We're sponsoring this plan as a company, and on behalf, I'm just mentioning the company, and most companies do, to provide you with an opportunity to save for your retirement, right? And that's called a 401k plan. There's many different 401k plans. I'm sorry, retirement plans. This specifically one is called a 401k. You can participate in this plan if you're at the company for a certain number of time, number of hours. If you're there for a certain period of time, if you're listening to this video, you're likely are included in the 401k based on your eligibility conditions. And there's the eligibility conditions right there: 1 year of service and 1,000 hours a year of which is basically considered full-time. So I'll cover elective deferrals now. Jerry, let me know if I'm missing anything. Mm-hmm. Basically, as you go through and raise your hand and log on to the program, it's going to ask you, how much do you want to put into the 401k plan? That's your elective deferral. You can say, hey, I'm going to enroll, but I'm going to put 0 in. I'm going to enroll, but I'm going to put 1% in, 2%, 5%, 10%. So as a participant, you get to log in and pick your deferral amount. That comes out of your paycheck, and that can come out in 2 ways. And there's in the last sentence kind of covers this. If you need to revisit this, there's 2 types. One is pre-tax, which means the money's taking out of your paycheck before tax, and then it grows tax-free throughout the course of your savings career. When you pull that money out in retirement, you pay taxes at that point. The next way is considered a Roth deferral, which is after tax. You pay tax today, you move the X percent of your paycheck to your savings or to your benefit account. When you pull that money out in retirement, there's no tax. So it's either pay the tax now or pay the tax later. We'll have some educational materials on that as available for you as well too. Jared, do you want to cover some of these things? I see you scroll. Sure. I think there's a couple of things I don't want to miss.
Excellent. No, and my name's Jerry Elling. I'm the administrator of the plan with the retirement plan company here in, I'm based out of Connecticut, or based out of Tennessee. And what I'm going to do now is go over some of the questions. Chuck just went over, how do you put money in the plan? You work for the Troutman Hospitality Group for 1 year. You've worked 1,000 hours within that year, and now you're eligible to put money in. So when you put money in, the next natural question is, how do I take money out? Well, you can retire. And normal retirement age in the plan is 65. If you terminate employment and you go to work somewhere else, the money will follow you, or it can become an IRA. So you can withdraw the money out and roll it into an IRA. You never really want to just cash it in, because if you cash it in, there are penalties before the age of 59.5 when you take your money out. Now, you are always vested in contributions put in by the company. You're vested in your own elective deferral. So Chuck touched on the money that you're going to have come out of your paycheck and save for your retirement. You're always vested in any money that you roll over from a retirement plan that you had somewhere else or an IRA. You can roll it here. Or we're going to go over the safe harbor contribution or the match that's available in the plan next.
Can I
Now,
chime in really quick?
sure.
Vested, because it's in here so many times,
Right,
means those dollars you put in belong to you,
right,
right? No matter if they make it into the plan, they're yours. And there are some types of dollars that I don't think we'll see maybe this year, but possibly down the road where they have a vesting schedule, right? But every dollar that you
right,
get that you
right.
put in the plan is vested.
And
So I
this
want to
would be
explain what
the
vesting meant. Yeah.
vesting schedule if, at some point in the future, the company decided to put in a company contribution that wasn't related to the safe harbor match. You would need to be here 6 years to keep it. But in regard to the safe harbor match, the plan is going to provide for a dollar for dollar match on the first 3% of pay that you put away and 50% of the next 2% of pay. So in other words, if you want to make another 4%, you need to put 5% away in the plan. And that will help you on your road to retirement. It's a famous adage that if you're able to save 10% of what you make pre-tax, then you will have no trouble in coming up with money at retirement. Well, between the 5% you put away and the 4% company match, that's 9. So that gets you most of the way to where you need to be at retirement to continue on with the same lifestyle that you have now. And then in terms of some other ways that you can withdraw money from the plan, if when you reach 59.5, you can withdraw money from the plan that you're vested in without having a 10% withdrawal penalty. And if there's a hardship, you can also take money out of the plan. Now, hardships are defined. They're to prevent eviction or foreclosure, to pay for a home, to pay for a college education, to pay unreimbursed medical expenses, or if you have a catastrophic loss like Sandy, where you've had the loss of a house or something like a primary residence, you can take money out of the plan as well. They'll all have to be verified, and TRPC will act as the verification agent on that, which means you have to show us the contract to buy the house. You have to show us the loss from your insurance assessor. All right, and with that, what I want to do is take you into what you'll see on the web to sign up for the plan. So you'll click on new user, and under new user, what we're going to do is ask you to authenticate. When we ask you to authenticate, we're going to ask you to give us your social security number, your zip code, and your date of birth. So if you've tried it twice and that doesn't work, you've been locked out for some reason. For most of you, it will work. But in the case that, a couple of things you need to know about authentication. We need your current address on file with your employer. That's where we get it from. And in the future, all address changes need to go through Georgine. We don't want to hear from you directly that you've changed your address. It's a very sensitive piece of information in financial services. But once you've done that, you're going to log in and it's going to take you to our website. Now, this is a demo site, so you're going to see something on that. And this is what you'll see when you log in. It'll be your what we call your dashboard. Now, there's a lot of important information on the dashboard, but the most important piece is your projected retirement income. The account balance is great, but if it's not enough, if you're at 80% of goal or 50% of goal or 90% of goal, you need to save more for retirement. Now, your projected retirement income is projected by looking at your earnings and what you should expect from Social Security. We will also project out what this plan can provide you at age 65, given your current contribution rate, as well as you can plug in any outside savings that you have, and we will earmark what your surplus is. So If you have a surplus, I don't want you to think that means you can set aside less. Where that surplus to carry all the way through to retirement. It does mean you get to retire early, or you can have more money in retirement, but don't ever offset the fact that you're going to need money in retirement. So with that, you can click on review your strategy, and it will go over what you need to know to save for retirement. Another way to do this is to meet with Chuck. There are always benefits to meeting with a financial advisor to help you set aside money for retirement. Under account balance, we'll show you what you currently have. We'll also show you your vested balance and your rate of return over the last quarter. You'll also be able to click on manage investments, and I'll get into that momentarily, and that will take you to where your investments are. And then finally, you'll see your contribution rate. And what we're showing here is a participant that's putting away 4% pre-tax, 3% Roth. What you should know about Roth contributions is that they have a 5-year clock for permanency. So if you wanted to start that 5-year clock right away, just put 1% of pay in. That starts the clock. You can continue to put in both Roth and pre-tax. The limit for 2022 is not a percentage. It's a dollar amount. It's $20,500. You cannot defer more than that in your retirement account. So if you are going to turn 50 during 2022, or you have already turned 50, you're able to put away an additional $6,500. So if you're turning 50 or you're about to turn 50, you can put away $27,000. Now, underneath that, we'll show you your portfolio and the funds that you're invested in. These are demo funds. They are not necessarily the funds that you're in. I think the funds that you're in are a better list than this. The Vanguard Index Admiral Fund is an inexpensive S&P 500 fund. You can click on it to learn more about it. I'll get more into that in a few minutes. As well as something nice to look at from a cybersecurity standpoint, what is your recent activity? Make sure this is you. So when you look at it, make sure that your deferrals are going in, make sure that, if you logged on, that transaction was to you. And then over on the lower right, we're always going to have some kind of a tip to save more for retirement. This splash screen is available. The whole website's actually available as a mobile app. So if you look up the Retirement Plan Company mobile app, you'll be able to authenticate on that on your phone as well. Some of the other menu items that you're going to see up here are a benefit summary. Sometimes you have to give that to someone. If you're qualifying for a mortgage, they want to know what your net worth is. And then you'll have transactions. Under transactions, you can manage your investments. The plan doesn't have loans yet because nobody has any money in it, but in the future, if you wanted to request a loan, you can do it there. You can look at your transaction history or request one of the hardship distributions that I talked about. In terms of managing your investments, let me show you what this looks like. There's a trick to it. One, there's a question and answer section that will help you create a strategy. Our portfolio manager has put together models that you can use that will help you save for retirement. Or you can use the target date funds that are set up for someone your age. Either way, when you go in, you will be defaulted into the target date funds. If you don't want to be defaulted into the target date funds, you'll initially want to change your election. Now, after some money has come in here, changing the election only changes money that comes into the plan from your paycheck. Transferring funds transfers the money in your account between the funds in your plan. So let's suppose that you are set up to have all of your elections go into the target date funds. You meet with Chuck. Chuck gives you a portfolio that you want to be in. What we're telling you is you need to change both the elections and transfer the money. And to give you an idea of what those screens look like, they're very simple. They give you a list of the funds that you're in, and they ask you what do you want to change them to? So here's your current mix, here's your new target mix, and then you'll have from and to, and you want to make sure that they add up to 100. Now, if they add up to 110, I know what you mean, but I can't give you more money, right? You just want to make sure that they hit 100, otherwise it won't let the transaction go through. So that's managing your investments. If you have any questions about this, you can always contact us at the support line and call the 800 number, and we'll walk you through how to do it online. They can actually see where you are in the system and walk you through screen by screen what you need to do to move your money around. The great thing about that is all of the calls are recorded. So if you make an error or you feel like an error was made, we can actually always go back to the call and listen to what instructions you were giving the customer service representative. We are open from 8 o'clock in the morning Eastern Standard Time to 8 o'clock p.m. Eastern Standard Time, Monday through Friday. So again, that's how you can manage your investments. If you ever want to look up the performance of your funds, you can always look at either your personal rate of return or the actual investments that you're in. So this will give you, you can break it down annually over a custom time period, quarterly or monthly. Were you to go back and want to look at your investment information, you can click on either the information that we have available on our website about the fund, and it should load here any second. Or what we'll do is go back and you can look at a Morningstar review of each of the funds that you're in just by clicking on it. And if you want more information, you can actually scan the QR code and it'll take you to more in-depth details about how that individual fund works. Finally, in the forms and reports section, I need you to all go into forms and click on beneficiary form. And what this will do is download your beneficiary form. And Chuck had talked about this before, and it is important. And I say this because if we need this form, you're not around for any of us to answer any, ask any questions to. So when you name your primary beneficiary, please include their address and their relationship to you and any other additional information you can give us. If there is a previous address that you can include on, if you have a common name like Smith or Jones, more detail is always very helpful. And then if something were to happen to the two of you, who is your contingent beneficiary? Now, there are a couple of rules behind this form. The first one is, if you are married, your spouse is your beneficiary. If you're not married, you can name whoever you want. But if you do name a minor child, please be aware that depending on what state you live on, they may not be able to access that money until they're either 18 or 21. Now, if you're married and you don't want to name your spouse's beneficiary, you fill this form out, you go home and you tell your spouse, I'm going to put away 5% of pay, the company's going to give me 4%, and I'm going to have $1 gazillion at retirement. But if anything happens to me, I don't want you to get the money. And then you have them sign it. I waive my right and consent to a new designation. And when you do that, that needs to be witnessed by a notary. So you'll need to go to a bank or a public notary, a notary public rather, who can witness that signature and keep it on file. All right. And then in terms of other things that you need to do on the website, that's pretty much it. There are some tools available to you, including our Educational Resource Center. There are articles about investing. There is a basic investment guide, information about calculating your finances in the future. Chuck can go through any of these with you. What does your paycheck look like if you put 5% of pay away and the company were to match it? Should you use Roth or traditional contributions? It's all right there, as well as in the website, there is more information under tools in our financial wellness center, where you can learn about retirement planning, saving for college, how to manage your personal finances, insurance and protection, how to better manage your employee benefit plans and Social Security. Click on personal finance just to show you a little bit about what's available. And there's a lot in here. There are videos on how to manage your credit profile, on planning your finances, and what are some of the basics. There's women do handle money differently. So there's a video for women and how to manage money, investment basics. Right now we get a lot on handling market volatility, as you can imagine. And there are other articles that are all available to you, some of which I've written actually. So, if you have any questions about this or what's available in the plan, please reach out to Chuck. And at this point, when I was online, I would usually ask for questions, but I think at this point, I'm ready to hand it back to Chuck and say, this is the beginning of a big adventure for you in saving for retirement. And good luck to all of you. And with that, I'm going to turn it back to Chuck.
Thank you, Jerry. The educational tools, the information that's on the website, the fund data, that's all really helpful and really educational. And I really want to summarize the two most important steps if you want to get started and you really want to succeed long-term. It's pretty simple. It's sign up for the plan, get some salary deferrals going in there, and choose your beneficiary. Now, the investments are very important, and I want you to go through that risk calculator or that onboarding process so that it can choose and help you choose a portfolio based on your age, or you can choose a target date. But the most important thing, if you're interested in this, is really to get started, right? Because if you think about if the market's up 10% or 100%, and again, there's no guarantee of that because it's almost never happened for the broad market to be up 100%. But if you've got $50 in the plan, it still amounts to dollars. The real success in ongoing retirement plans and saving for retirement is in the consistency and is in getting started as early as you can. Those are the two steps I would suggest you start. If you have any questions along the way, we're certainly here. I'm certainly here for anything that you have. Contact me directly. And again, good luck getting started. Take that first step, feel it out. And if you have any questions on savings rates or how to proceed, let me know. Certainly, if you have any questions on an issue that you have with the website, use the help function that Jerry showed you on the site, or give me a call and I'll direct you as well too. So with that being said, let's get started. Let's be available and support each other long-term for anything that you have as you progress towards your retirement savings. And communication is always best. So let us know how you're doing. Let us know how it went. Even if you got on quickly, I'd love to hear your experience and your thoughts. And then what we can do is, as you get started, is check in, whether it's a couple months or 6 months or 8 months from now, as you start to accumulate, is it really a great time to check in again to say, how are we doing? How's our progress looking? We just got started, but let's not just be blind to this every 5 years. Let's look at it. Let's be on a guide to where we can look at this every 12 to 18 months and connect one way or another. So I appreciate everyone's participation. Again, I appreciate Charlie, Joey, and Georgine for getting the plan started. I appreciate Jerry and the team at TRPC for providing this resource, and John for helping us as well too, from the corporate side of things, from the accounting side of things. And we're here for your success. So thank you.
You got it. Thank you, everyone.